Welcome to MoneyWise Smart's Multibagger Research Series Earnings Updates, where we provide updates on the recent earnings of the great potential multibagger businesses we cover. StoneCo is a modern fintech payments company in Brazil with exponential growth and has Berkshire Hathaway as its shareholders. On 11 March 2021, it released its full-year results for year 2020. Before we discuss the earnings, please smash the like button below and subscribe to our YouTube channel. That will help us a lot with the YouTube algorithm and keep us motivated to bring more of such high-quality content to you. On 11 March 2021, StoneCo, which we will refer to as Stone, announced its 2020 Q4 earnings results. Despite the challenging year posed by the COVID-19 pandemic, Stone has continued to grow impressively in all key metrics, including total payment volume, number of active client base, total revenues, adjusted net income, and adjusted free cash flow. For example, Stone had a record quarterly addition of new clients in 2020 Q4, reaching over 652,000 active payment clients in 2020, an increase of 35.7% year-on-year. Total revenue increased by 29% year-on-year to 3.3 billion Brazilian reais. However, net profit margin dropped from 31.2% in 2019 to 25.2% in 2020. What happened? Here are our 15 key points of the earnings results and earnings call, including the CEO's views on the company's strategic directions and moats. Total payment volume, in short, TPV, in 2020 Q4, including Coronavoucher, was 64 billion Brazilian reais, a 60% increase from 40 billion Brazilian reais in 2019 Q4. TPV for 2020 full year was 210 billion Brazilian reais, a 63% increase from 129 billion Brazilian reais for 2019, which is a record addition of TPV in 1 year of 81 billion Brazilian reais. This increase is equivalent to the total TPV Stone processed in 2018 at 83 billion Brazilian reais, excluding Coronavoucher. TPV in 2020 grew at a lower rate of 43% from 2019, again resulting in a record year-over-year TPV addition. The diversification of Stone's business, both in terms of geographic coverage, profile of clients and channels, has helped it to deliver such an increase even during a year with strong pandemic impacts. On the TPV mix, excluding Coronavoucher volumes, in 2020 Q4, the clients of Pagar.me, which is the payment service provider offering various services including Mundipag's gateway services and prepayment solutions, represented 40% of the total TPV, with hubs and TON representing the other 60%. The TPV showed strong growth for both TPV in the hubs as well as in Pagar.me. In its hubs, TPV grew 45% year-over-year in 2020 Q4 with improving unit economics and higher TPV per client than in 2019. Pagar.me's TPV grew faster at 80% year-over-year in 2020 Q4, but slower at 40% excluding Coronavoucher. Active client base in payments excluding TON, their solution for micro merchants, was 653,000 in 2020, a 36% increase from 2019. This was a record net addition of clients in a quarter. TON, since its launch in March 2020, grew significantly as Stone learned more about their clients and succeeded in improving the unit economics of the solution. The number of TON active clients reached 114,000 in 2020, with a 75% client base growth from 2020 Q3 to 2020 Q4. Given the encouraging unit economics trend and the traction of TON, Stone expected to continue to invest in 2021 to improve the solution and bring it to more clients. Stone had also decided to change the scope of their media agreement with Grupo Globo to the whole Stone Group in January 2021, where they executed the flip of Globo's 33% ownership in TON to the Stone level by issuing 1.3 million Class A shares, equivalent to 461 million Brazilian reais to Globo, and in return, Stone now owns 100% of TON. With Globo now owning shares in Stone, Globo would have more incentives to help Stone succeed. Stone did this deal because they believed that being able to have access to Globo's media and expertise to also strengthen their other brands other than Ton would be the ideal move, giving them more flexibility in terms of media allocation and seeking better overall returns. On credit solutions, the number of clients with credit solutions grew to 89,000, or 3.7 times over 2019. The open digital banking accounts reached 508,000, or 8 times over 2019. The number of software clients was 388,000, or 2.9 times over 2019. Stone's ABC, that is acquiring, banking, and credit, plus software strategy has progressed well in 2020. At the end of 2020, 34% of their small and medium-sized businesses, in short, SMB, acquiring clients used at least one of their other financial products compared to only 10% in 2019, leading to higher revenue per client and lower churn. At the end of 2020, 5.3% of these were heavy users compared to only 0.5% in 2020 Q1. The heavy users refer to users using multiple financial solutions, and they generated 2.6 times higher revenue compared to the clients using only a payment solution. At the end of 2020, the ecosystem of software solutions, including the POS and ERP solutions, had approximately 388,000 clients, an increase from the 342,000 in 2020 Q3, or the 135,000 at end 2019, representing a significant 13% quarter-on-quarter or 187% year-on-year increase respectively. Total revenue was 1,001 million Brazilian reais in 2020 Q4, a 28% increase from 783 million Brazilian reais in 2019 Q4. For 2020, total revenue was 3,320 million Brazilian reais, a 29% increase from 2,576 million Brazilian reais in 2019. The management believed that there is still a lot of room to penetrate the 120 billion Brazilian reais addressable market of payments, software, banking and credit for SMBs. Excluding other financial income, which comprises primarily interest on cash, revenue grew rapidly at 32% in 2020 Q4 from 2019 Q4, despite the COVID-19 impact. The revenue growth was driven primarily by the growth in TPV as discussed earlier, offset by lower take rate year-over-year. Net revenue from transaction activities and other services was 335 million Brazilian reais in 2020 Q4, a 46% increase from 2019 Q4, mostly due to the growth in TPV, offset by the reduction in take rate year-on-year. Take rate, including Coronavoucher, was 1.49% in 2020 Q4, a 0.19% increase from 2020 Q3. This increase was due to lower Coronavoucher volumes in 2020 Q4, which were debit-like transactions with lower take rate. However, excluding Coronavoucher, their take rate was 1.64% in 2020 Q4, or a 0.12% quarter-on-quarter decrease from 2020 Q3, mostly as a result of seasonal effects, namely, 1. A higher proportion of debit over credit, and 2. The effect from revenues which are unrelated to TPV, including POS subscription and revenues from their credit solution, which had a negative impact on take rates in fourth quarters due to strong volume seasonality. For the remaining points of this video, please check them out at our multi-bagger research series at the link in the description below. In that series, we discuss in detail great businesses to own and compound our wealth for the long term. These great businesses have been growing fast in terms of revenue, profits and free cash flows. For example, this global payments company has grown at a compounded annual growth rate, or CAGR, of 60 to 80% from 2014 to 2019. Meanwhile, this technology company has grown its revenue at a CAGR of 80% from 2016 to 2019. And this payments company has grown its revenue and profits at a CAGR of 20+% in the past decade. If you have enjoyed this video, please smash the like button below and subscribe to our YouTube channel. This will help us with the YouTube algorithm and keep us motivated to bring more of such high-quality content to you. Do join us in our investment forum on Facebook. using the link in the description below, where we discuss lots of interesting businesses and investing concepts.